talk to Charlie Robertson about it in London, Global Chief Economist at Renaissance Capital. Let's deal with yesterday, first of all. The way the markets fell dramatically, the way the oil price fell dramatically. That's not uncommon, is it? It will happen, not quite knee-jerk reaction, but on the news it will fall and then possibly start to correct?
Yeah, we do need to price in the uncertainty. So the markets had a fairly clear playbook to what to worry about, and it was global inflation or it was China recession risk, new variants that could break through vaccines and spread incredibly quickly. That wasn't anyone's major base case until yesterday morning. So the markets have had to price that and seen that 2% fall. I think the bigger drop, the $10 fall in the price of oil, that's a bit more of a shock, and I guess is related to concerns and interest about what OPEC might be doing, about the SPR release that we saw a few days ago from the US and others.
Yes, the problem we've got more broadly is that the WHO itself has been saying, look, we need a couple of weeks to really know what the effect of this is going to be. And in the meantime, there will be all this uncertainty and governments will make their own reactions. They're already making their own reactions and shutting down.
Yeah, for the economy and for the kind of GDP numbers and so on, or the inflation story, I don't think the next 2 weeks matters very much. We get a 2 week of blocked flights to South Africa. That's not such a big deal. No. But it does mean that the markets probably don't recover on Monday in a straight rebound, unless we got something startling out, like the new variant doesn't kill anyone. It's possible it's much more contagious, but doesn't kill anyone. Unlikely. And the markets are down because that's not the most likely, but we just don't, there isn't a lot we do know yet.
What else should we be keeping an eye on? I mentioned a few things there: interest rates, inflation, supply chain, which was already a huge issue. Is that the type of thing which can be compounded further? I know we're still in a bit of speculative territory, but...
Yeah, but I guess it's more that the supply chain issues weaken, that we potentially see lockdowns again in Europe or the States, because it's going to take Pfizer 100 days to come up with a new vaccine, if they need to, and then that needs to be rolled out to vulnerable people, ideally the whole population. This is, what, a 6-month story. We know tourism gets whacked. Who's going to book a holiday to Turkey next year? I was looking for $20 billion worth of more money for Turkey from tourism next year. Who's going to be booking that holiday now? So we know that that's a problem. And yes, there's an awful lot of uncertainty. So at the moment, I think people will be rolling through the next few days trying to say, OK, how is this going to potentially play out on interest rate views? For the supply chain, though, to come to your question, I would guess actually eases the risk that people won't be buying quite so much stuff.
The fear, the overriding fear, I think, which people would have is that we go back to quote-unquote lockdowns. Now, if we rewind, 16 months or so, when they were hard lockdowns and economies really suffered and businesses suffered really quickly, I think the lesson must have been learnt from them that maybe won't work again, that it would help with the virus, obviously, but that it could absolutely destroy economies and businesses if we went that hard again.
It's... Yeah, except that we've also got this example of China, which people are saying, really, is China going to keep being so restrictive against travel into and out of the country? And now it looks totally justified that what China's stuck with all along seems to be working well for them today. Now, I think there's going to be more political argument about it. We already saw protests in Holland, in Austria, when they reimposed lockdown just in the last week or two. I think it's going to be politically more difficult. And also, I think governments will be a little more cautious about what they would spend in lockdown because they've seen this inflation surge come out of the current situation. So they will be a little bit more wary about doing that again next time.
I bet. Charlie Robertson is from Renaissance Capital in London. Great talking to you and getting your views. Thank you.
Thanks very much.